Hello again, everyone. Welcome back. This is Joe Henches with Beyond the Chart. We're going to take a look at the price action in the stock market here this last week, Friday ending May 16th. Let's start off here with the index ETFs. Everything was in the black this last week, and the strongest mover to the upside here was the Qs, 6.87%. Interesting that 3 out of the 4 now are positive on the year. With the Qs being the leader, and now the Russell 2000 is still in negative at -5. Look at what the sectors did this last week. The prior week, 8 plus. Remember the 2 weeks before that, we were like +15, -1, +15, -1. Then all of a sudden we go to a 50-50 and we come back with a vengeance. 16 positive, not a single one negative. And on the year, now everything is gone, just kind of like what the index ETFs have done. Everything is flipped to greater than 50% of them are positive on the year, 10 up and 6 down. This is the first time we've gotten it. It's taken 4.5 months for that to happen. This last week, the strongest mover were the semiconductors, big bounce. SMH continued to push higher in here. As we said, nothing in the red. Right there with it, look at retail coming back. We had consumer discretionary 7.5%, technology, of course, semiconductors are kind of a part of technology, so up almost 8%. And then XLI, industrial, that was kind of a surprise to me. I hadn't been tracking individual industrial stocks, etc. Up 9.1% now, edging out utilities. And NASDAQ Biotech continues to be very weak, though. Where's XLV? XLV, because healthcare got hit pretty hard, especially with United Healthcare getting hit the way it did this last week. But the NASDAQ Biotech continues to be the weakest one, down 8.4%. Okay, that's the snapshot for Friday, the week ending Friday, May 16th. Let's take a look at our individual indices one by one, starting off with the Dow Diamonds. Okay, the diamonds were up 307 on Friday. The Dow Industrial's up at actually about 332. So we're into this zone here on the week, up 14, 13. And we're into this little resistance zone. We'll see whether or not we can push through this. The zones that I identified in the other indices and in the SPY and the Qs, they've pushed through them. But so far, the Dow is kind of sitting back a little bit in here. Still continuing to ride above the 10-day moving average. We haven't gotten it nearly as overbought as we have on the others, which I'll talk about. Let's just do that right now. Let's go to the SPY. Up 374. Wow, look how strong this is. Above the Keltner channels for 5 days in a row. And again, we've been up above the 10-day moving average for 2, 4, 6, 8, 10, 12, 14, 16, 18 straight days. Quite the move. We're getting overbought. And here's what we did on the week. You can see the big jump up. All the major indices had this kind of a gap up because of the announcements related to the negotiations between the United States and China last weekend, right? So it pushed into the end of the week. We'll see what happens. I've got something I'll show you in a second. Let me go to the Qs, and hopefully I'll remember to show you it. Up 226 on the Qs and $33.54 on the week. So this is very, very strong. Not only are we above the April highs, we're above the March highs and rapidly approaching the February high. Okay, so we'll see whether or not we can continue to get there. When I look at the Elliott Wave picture, let's start off with the weekly view. This is the same scenario that I've got for the SPY. Okay, I think based on what happened with intermediate wave 2, that it was a zigzag pullback, a sharp pullback. I'm expecting more of a sideways corrective pattern in here. And then based on the first corrective move that we got, which was a flat, and I'm expecting to see another corrective pattern develop, either another flat, a zigzag, or a triangle out here. And, if it takes as long as it did for the first corrective pattern, we're going to be talking about something that doesn't end until maybe the beginning of September or so. We'll see. Right now, the first thing we got to do is get this X wave finished, which on the Qs, we may be there. We'll see. Let's take a look. Let me look at the daily here so that you can see what I'm talking about. C versus A. I'm talking about this zigzag pattern. That's my default that I use for an X wave. An X wave can really be just about anything in terms of connecting to corrective patterns in here. But right now, this looks and acts like it's a zigzag, and this C wave has gone beyond equality with wave A, beyond the 138% retrace or extension level that I look for, and the next threshold is 161.8. Well, that's almost exactly what the high was on Thursday. So we'll see whether or not that's going to hold. 521.93, 521.84. I mean, we're right there. Okay, so it's really interesting how extended we are, where we're at with the targets. And then let me show you this. Here's what happened after the market closed on Friday. So the market closed right here. These are hourly bars, okay? Then this is showing the dark is during the regular session, and this is the extended hour overnight session. So we closed on Friday at 521.52. And look what happened in the aftermarket. It came down and dropped over 7 points, I believe, and took out the intraday lows, or what happened during the day on Friday. And so I think this is in reaction. The only thing I could see, I think this is in reaction to the downgrade of the U.S. debt by Moody's. Now, there may be something else going on that I'm not aware of. The SPY did something similar, but these guys, the Qs, reacted the most. So we'll see what kind of follow through do we get Sunday night as we get into the futures trading and overnight, etc., going into Monday morning. Okay, so that's where we sit with the Qs. Let's take a look at IWM. Okay, so the Russell 2000 ETF, IWM, has had its own little resistance zone, which it's been struggling with this past week. Well, the first 4 days kind of stuck in there. But on Friday, closed slightly above that March 25th high. So we'll see whether or not this has got any strength to continue to push in here or not. I mean, let me look at this. Look at this whole move. Let's do right here. Let's just go here. We're right at about just slightly above the 50% retracement of the entire move down from the November high. Okay, so you get into that 50 to 61.8% retracement zone, and you start watching. You're on high alert for retracements and flips back to the downside. Okay, so that's the Index ETFs. So one of the things I was looking at here, especially when the Qs, is the Magnificent Seven, and who's the best performer here over the last month or so, or even this year on the Magnificent Seven? Just eyeballing it, look at Microsoft. Microsoft is up here right at the December highs. I mean, this is the best performer out of the seven. He is right there. I mean, this intraday high, 456.16 on Thursday. The intraday high, 456.19, 3 cents above the December high intraday. Amazing move that Microsoft has put on. Now, who's the big laggard, the weakest? It looked to me like Apple, and the main reason is if you take a dashed line across the April highs, we're not even closing above the April highs yet. Okay, so here's the April 30th, and it's the high bar of the month. Well, no, I take that back. Spaced out. I'm looking at this too much. Here's the April highs. We're not even close. Look where we're sitting. Okay, we're sitting down here. So clearly the laggard. And when you look at this, is it going to get worse, or is it going to continue to break to the upside? I mean, you could almost make the case that this is somewhat of a head and shoulders consolidation pattern. Well, I'm not going to get too excited about that unless all of a sudden this starts to break below the 10-day moving average and starts to break down. Hasn't really done that yet. But, you know, here's what I'm talking about. And a head, and then a right shoulder, and you have something like this. But we'll see. It needs to prove itself that that's what it wants to do at this point in time. Okay, so that is 2 from the Mag 7. Now let's take a look at a couple of the indicators. First one I want to grab is the VIX. Look at this move on the VIX. Isn't this incredible? I mean, it is an amazing move. Down 59 cents on Friday, and now this color-coded area here is a zone that since the end of 21 had proved to be somewhat of a cap. Now, granted, there was periods all the way back into 2020 where we stayed above it, but let's just look at back over here, starting at the end of 21, December of 21. Remember the really bad down year that we had in 22? Well, look how the peaks in the VIX had a tendency to run into resistance in this zone, in this area. If they stuck their nose above this level, which is about, what, 36.5, it didn't stay there very long. And even since then, if we look back into last year, you didn't stay there very long. We had one close above it back in August, on that August 5th. And then this sell-off that just happened here, we had 5 closes above it. 6 days, but 5 closes above that level. And then we come back down, and then look at this. And, you know, and what was it that happened? The 62% decline in the VIX over the last 6 weeks is the biggest volatility crash in history, according to Charlie Bell in the stats that he puts out here. Pretty amazing stuff. Okay, and then of course he's got all the results that says here's what happened with the S&P 500, 6 months, a year, 2, 3, etc. on out. So you could see it's pretty dramatic. Okay, so that is the VIX. I want to take a look at the percent of stocks above their 50-day moving average. Right here. Looked at this a couple of weeks ago. Look how we got above the 50% level. We kept pushing. We're now up into that 70 to 80% level, closing at 77% of the stocks in the S&P are above their 50-day moving average. Well, again, we're starting to run into a potential little headwind area up in here. You know, back in July of 24, where we peaked out before we had that big August sell-off, that zigzag move down, okay? Then we come bouncing back up at the end of August, and here's September into October, and this had a tendency to be an area where it, you know, kind of ran out of steam. So we'll see what happens here with the percent of stocks above their 50-day. Now, another interesting one that I watch on a regular basis is the high yield bond fund, HYG. I think of it as like an indicator, a risk on, risk off indicator. Let's look at the weekly. We've also got a band here where this has had some resistance during the same time frame, September through, you know, earlier this year. When we've gotten up into this area, it's kind of been, an overhead resistance and repelled the move back down. So we've just now snuck into it, up 87 cents this last week. So we're closing at 79.42. So we'll see what happens. We're talking about in the 79 to 80 range, 79 and a half really in that area here on the on HYG. So, you know, it's just something to be aware of, something as a little bit of a caution, a little bit of a flag. We've come pretty far, pretty quick. The next thing I want to take a look at is this tweet that I came across. This is Charlie Boel looked at these and said, okay, this is one of the greatest comebacks in market history. Up 19% in the S&P 500 in the last 27 days. Now, the interesting thing is you start to look at these numbers in here. He shows, including the most recent, ending on Friday, he shows 15 results that he ranks. But in reality, we only have 5 periods of time. Okay, so he's talking about March of 2020, because then you see there's another March of 20, March 20th, March 23rd, March 18th. There's March of 2020. There's March of 2009. There's August of 1982. And there's several again, just like this. So we have an August, and we have another August. In August of 82, when the market exploded and started off the huge leg that went from 82 to 2000. And then we have October of 74. And if you look back at the 70s, you'll see where that was in terms of declines and what happened afterwards, etc. And then here we are. So there are 4 other major market turning points, and then we get this kind of move. So it's going to be really interesting to see where are we 1 year, 2 years out, etc. Short term, I think we're going to run into some resistance and some headwinds. Okay. Now, more good news in terms of statistics on this move. When the market has had, the S&P 500 has had 58% of its components hit a 20-day high, it's gained on average 18.7% over the next 12 months. So, and then he gives the statistics in here. So pretty amazing stuff again, that just a strong indication that this market should have legs out into the future. That doesn't guarantee anything about the next 4 to 6 weeks, but and maybe over the next couple of months. I'm expecting volatility, but it does indicate that we, I think, are at the early stages of another, another leg to the upside. Very early stage. Okay, let me take a look at one more thing. Oh, that was the last thing I wanted to show you was this. So, after all that good news and everything, here's an indication by the same folks, Isabel Nett, talking about the technical composite of indicators showing that we're overbought. And really, I'm seeing that on several of my indicators. I showed you a couple of them. We'll see what happens here over the next, like I said, 4 to 6 weeks, because I think we've gotten to that point. Now, it doesn't mean that even this next week we're going to collapse, but just keep an eye out on price action, and we'll see where we go from there. Let me go back and end with the SPY and just show you where we sit in the Qs. Okay, so yeah, it's been one heck of a move, and you can just look at the area up in here that it's got to get through to punch into new all-time highs. Okay, that's it for this video. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information, head on over to joehenches.net. Everyone have a great week. We'll talk to you on the next video.